Banks closed a record number of branches last year, causing some customers to panic. I'm your host, Steven Van Metre, and thanks for joining me today as banks closed a record number of branches last year, as leaving many to wonder if this means a central bank digital currency is on its way, or perhaps if the banks sense another financial crisis is coming and are trying to mitigate a bank run. Well, let's see if we can find out the truth as we head over to CNBC, who headlines the U.S. banks close a record number of retail branches in 2021, Wells Fargo shuttering the most. On net, U.S. banks shuttered 2,927 branches last year, according to S&P Global Market Intelligence data. Banks closed nearly 4,000 branches and opened more than 1,000 branches, the analysis found. We anticipate the downward trend in branches will continue for a number of years as more of the transaction-oriented aspects of banking are done digitally, according to the head of U.S. Bank Equity Strategy at RBC Capital Markets. The branch closures also come as banks consolidate, with mergers, acquisition deals in the sector topping $77 billion in 2021, the highest level since 2006, according to S&P Global. As consolidation continues and there are overlapping branches when deals are approved, there's no need to have two branches on Main Street. And while there's a lot of truth to this, as the federal government actually tracks commercial bank data, check this out, as you see here from the St. Louis Fed database. Now, this is discontinued, and I do have an updated one we'll look at in a moment, that you can see the number of commercial banks in the U.S. since the 1980s has been going down steadily, leaving many people banking with the same bank. Not a lot of choices. Wells Fargo, the top branch closer in 2021, closing on net 267 retail locations last year, according to S&P Global Market Intelligence. While JP Chase was the sixth biggest net branch closer last year, the company opened the most branches in 2021 with 169 new locations as it expands into new markets. And of course, now we'll switch over to the Wall Street Journal, who headlines pandemic profits begin to ebb at America's biggest banks. And finally, we perhaps might find the truth. Of course, if you're looking for the truth in your portfolio, be sure to check out Portfolio Shield. You'll be glad you did. But let's see if we can find out what's really going on with the banks. Quarterly earnings fall at JP Morgan and Citigroup, ending what had been a streak of big gains. And banks have enjoyed unparalleled growth during the pandemic, buoyed by a deal-making boom, market volatility that supercharged trading arms, and a housing market that made mortgage lending more profitable than ever. At the same time, the doomsday scenarios that banks girded against the pandemic's early days that never materialized, which freed up additional profits. Bad loans remain near record lows, and consumer and commercial customers alike have weathered the pandemic with, on average, plenty of cash on hand, much to the thanks of fiscal stimulus. Now some of the forces that push bank profits to records are starting to weaken. JP Morgan said the shifting environment and higher costs would mean it wouldn't hit its longer-term profitability targets in 2022 and maybe 2023. And so here you can see the income expense, the number of institutions reporting, a proxy for the number of commercial banks, also provided by the St. Louis Fed. And you can see how that continues to go down as interest rates go down. And it's very clear that central bank policies of lower interest rates are forcing the commercial banks to consolidate. And as they consolidate, well, they don't need overlapping branches. And so, of course, that means fewer retail outlets for customers. Expenses rose sharply at JP Morgan and Citigroup and are expected to keep going up, as banks said, particularly as competition and wage pressures force them to increase compensation up and down their ranks. And so this isn't a story that central bank digital currencies are coming or the banks are concerned about a run. What this has to do is with everything, with the consolidation in the commercial banking industry, and due to the pandemic, many customers are accessing their accounts online and don't need to go into a retail branch. The banks are just adapting in hopes to keep their stock price and profits up. I'm Steve Van Metre. Thanks for joining me. Bye now. The content of this video provides educational information only. It's not intended to provide investment or other advice. The show has to be construed as recommendation or solicitation to buy or sell a security, financial instrument, or to participate in any particular trading strategy. This video was prepared by Steve Van Metre, personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.